Barry, the market is kind of shifting. Would you agree?
So real estate and housing is still very healthy, and we are seeing annual gains. So when you look at the annual gains, again, real estate we all know is local, but you have to look at it, where are we specifically talking? So if we're looking at a national level, we're seeing annual gains in housing still over 5%, and that's appreciation. Mm-hmm. Now, sales in many areas are slowing. There's obviously some reasons for that. We've seen interest rates move up a little bit. But it seems that there is a more pronounced slowdown of late. Now, is that part of the time of year? Mm-hmm. Of course, yes. But in addition to that, while that is a cyclical portion, there are things that are occurring that are slowing things down. Now, on a month-over-month basis, the most recent data says we're still seeing prices appreciate just at a slower level. There are a couple of markets around the country, like Seattle, mm-hmm. who has had a huge run-up, and Chicago, that are seeing some very modest price declines. And that's an important distinction. You oftentimes have people get confused between slower appreciation and prices actually declining. A lot of people offer reasons for this, Emilio. A lot of people say, well, maybe it's affordability. Maybe it's interest rates going up. Well, interest rates have come down a little bit as well. They're still at good levels. And affordability, quite frankly, hasn't changed that dramatically. In fact, people are making a little bit more money. The labor market is strong. Interest rates, as I mentioned, have gone up somewhat modestly, but not crazy. Mm-hmm. So what is causing this? And it's something that people aren't really looking at and nobody's talking about, but I'll tell you what the answer is. It's the stock market. On a relative basis, we have the greatest portion of assets in things like stocks than ever before when you compare them to disposable income. There's a relationship of 700% of disposable income is in assets like the stock market. So we're going to be very sensitive to a pullback in stocks like we've seen.
Sure.
And many people are invested in a lot of the stocks that have been high flyers, your Facebooks, your Apples, your Googles, your Netflix, things of that, Amazons, things of that nature that have really pulled back rather significantly. We're looking ahead to 2019 and still seeing a very strong year for housing, even though the rates of appreciation will probably be lower. But don't be fooled. Even lower rates of appreciation can create enormous amounts of wealth over time.